Welcome in Scott Bauer, the CEO of Prosper Trading Academy, joining us here this morning to get the week started. Scott, we appreciate it. Let's begin with Brexit because it looks like we have, although it's not official, an extension through January 31st.
Yeah, you and I talked about this how many times, Ben, and I saw this, and I think you did as well, as a very real possibility, and here we are. So, we're not seeing much of a reaction in the pound. The bottom line is the market, as we talk about, does not like uncertainty, and that's why we saw some weakness in the pound. Then we saw, a rally back here when there were, decent negotiations going on, and it's pretty much unchanged today, and I think we're going to see that just relatively stable moving ahead of what could be some possible elections coming up and then going into the end of the year before the new Brexit extension.
Yeah, we've certainly seen some of the volatility that we had been seeing come out of the market a bit. Scott, I noticed that the French Prime Minister said that the question is knowing why we should give more time. Now, this was at the end of the week Friday. He went on to say giving more time alone is not a solution. I guess I'm wondering what changed over the weekend, because they seem to be willing to go along with this now at this point. Very little, difficulties in terms of moving this along, at least in terms of French right now. They seem to be willing.
Honestly, I'm not sure what changed, Ben, but what I see here as obviously a pattern that each time the Brexit deadline has gotten within that week, 10-day period over the last, literally, it's been almost, 3 years, I think, we've still seen those extensions. So I think, again, they're just pushing it down the road, here another 3 months, it looks like. We'll have to see what happens.
Yeah, Scott, I'm wondering ultimately what this means for the dollar, because a big part of what's been giving the dollar the lift over the last 3 years, as you've mentioned, and some of the turmoil, some of the uncertainty that's been going on over in the UK is the weakness in the British pound. That's slowly starting to come back, though, as you mentioned, definitely have lost some of the volatility, and right now it's something like 900 ticks off those lows that we saw earlier this summer.
It is. No, it is, and I think in terms of where the dollar is headed in relation to the pound, it's definitely wait and see at this point.
Okay.
We'll have to see over the next few weeks about an election and then what actually happens, with Brexit here. More importantly for the dollar, though, is what's going to happen with the Fed later this week.
Point.
And I think that's why we're seeing some, a little bit of softness here.
Well, let's talk a little bit about the Fed here. Expectations are for a quarter-point cut. Is that what you're looking for, Scott?
The CME FedWatch tool is pricing it in at 94%, so almost a certainty.
Yeah.
It probably will happen, but, I don't think it's out of the realm of possibility here that we see them hold off and just say, let's wait till the next meeting. I'm not saying that's going to happen, but you know what? I would not be surprised if that does happen.
In some ways, that would make sense, Scott. I mean, you've got some of the major concerns that they were focused on off the table at this point. Trade, optimism associated with that, a potential partial deal. We were just talking about Brexit.
No doubt about it. And listen, if they don't cut, the market's not going to like it. However, that to me means it's a positive. That means that they see at least like you just said, some of these resolutions perhaps, which is really a good thing.
Yeah, or at the very least strengthening economic conditions, and it's kind of difficult to argue rate cuts in the face of strengthening or continuing strong economic conditions. Let's talk a little bit about Bank of Canada, Bank of Japan this week also. Any expectations? I'd imagine for the most part, even though some of the concerns are kind of off the table for them as well, maybe just a bit of a wait and see kind of position from them.
Yeah, it looks like status quo for Bank of Canada. Bank of Japan's going to be an interesting one because their board is very, very divided. They have, it's almost right down the middle about holding rates steady or a rate cut. Obviously there's concerns about global slowdown, but they're fairly in the same position as the U.S. is in terms of what is happening next, and is there a little bit of strengthening or a little bit of not necessarily strengthening but solidifying of what's going on economically. So it's going to be real interesting to see what happens with Bank of Japan and the yen on, I believe it's on Thursday.
Scott, a couple more questions for you. You're right about the Bank of Japan. It is Thursday. Are you surprised to see the Swiss and the yen holding up as well as they have almost as if someone forgot to tell them that risk on is back in full effect. We've got NASDAQ to new all-time highs in the overnight session. S&P's traded to the tick last I looked. They potentially have taken them out at this point. I mean, someone needs to let the yen and the Swiss know that we're back onto risk-on sentiment.
Yeah, they've certainly been lagging in that regard, and maybe they're looking to see what the Fed does on Wednesday before there's any big bets going on there. But you're right, that you would have expected them to be much weaker at this point.
Yeah, still holding on to those August, September levels here. The ES, I just took note, it actually has taken out that all-time high. Looks like up to 30.30 so far this morning. Scott, a great breakdown. Actually, I've got one more question for you in terms of the Fed this week. We were just talking Brexit. Some of the international economic data, and can really point to many factors that are influencing the U.S. dollar and some of the price activity. One has not been so much a factor, though, in terms of U.S. rates. I wonder, with some of the dust settling from the Brexit and the China talks, as we just mentioned, and the British pound and the euro currency losing some of that volatility, is it time to get back to basics and focus more on the relationship between rates and the greenback?
I mean, it would be great if we could throw out all of the, all of the minutia of what's going on. And again, it's all about the unknown. It's all about uncertainty. That's how the market trades. That's how, volatility gets added into the marketplace. And bit by bit, piece by piece here, like you said, Ben, some of these big headlines are just kind of getting thrown away here and just put off to the side. So yeah, I wish we could get back to basic. It would be a lot better trade in terms of being able to see technically what may happen here, because as we've seen over the last 3-6 months here, it's been anyone's guess.
Yeah, we'll see if we can get, as you mentioned, back to basics here and a sense of normalcy return here as some of this dust settles. Scott, really appreciate you joining us. A great breakdown in terms of currencies and some of the geopolitical events that are playing out here. Traders, that's Scott Bauer, the CEO of Prosper Trading Academy, doing it in a big way here, talking currencies.